the way to get there is to do a reset. I mean, the hard reset is, we go Stephanie Kelton, we just print all the money and the dollar literally becomes worthless like it was in Venezuela or Weimar. And at that
Well,
point in time, people are exchanging silver coins and Satoshis to buy and sell goods and services. And the new currency becomes, either silver, gold, or a Satoshi. We are in a situation where sound money is really becoming quite important. And actually, I don't think we're that late. I mean, if you go out and you look at all the financial assets, the $900 trillion of financial assets out in the world, gold is 20. So what's 20 over 900? That's a small percent. And Bitcoin is 2 trillion out of 900. It's like 2/10 of 1% of all the assets. So, I mean, we got some room to grow here,
Hey guys, welcome to Everyday Finance. Bitcoin is currently trading at almost $111,000, which is evoking a wide range of reactions. Some fear a decrease to $120,000, while others see it as a good opportunity to shake out weak hands. If acceptance and momentum continue, people are still confident that Bitcoin will hit $140,000 by the end of the year and will probably hit $180,000 too. $200,000 the next year. A steep decline, perhaps as much as 50%, may follow those peaks, according to historical data. It's not the end of the trend, though. That's just the way cycles operate. Bitcoin is actually trading at a fair price right now, since its current price is consistent with its power law value. Since they eliminate excessive debt and prepare the market for the next leg up, corrections have always been a part of the process. Because of its finite supply, Bitcoin is a better digital store of value than any other asset. And institutional interest in it is only increasing as it becomes more and more integrated into global banking. These structural elements promote a bullish prognosis for the medium to long term. Despite the fact that short-term volatility is still present, in a recent interview with Michelle McCrory, financial guru Lawrence Lepard discussed these concepts in greater detail. He outlined potential future developments and likened Bitcoin to gold.
We're carrying the gold right now at $42. We've got, 261.5 million ounces in the treasury, and they could revalue that upward and it would basically be like, the trillion-dollar platinum coin, but they would put a lot of money into the TGA and they'd be able to, pay down some of the debt, use it to do what they're doing right now, which is buying the long debt. That's one way of doing it, mark the gold price higher. But if you do that, you've really got to stand ready to buy and sell at the new higher price. And the tough and interesting problem about all this is that it's not just small. I mean, if you go up to $3,000 or $4,000, gold's trading today. In fact, it broke out through 3,500 an ounce on the futures. And if you went up to that level, that would put some money into the TGA, but it's not a big amount of money. I mean, there's a table in my book that was done by a friend, Brent Johnston, who shows that, and if you look at historically when we were on a gold standard, and you don't have to be fully reserved, you don't have to have every dollar backed by an equal amount of gold, but you generally got to be 30 or 40% reserved. We need to be at a gold price of between $20,000 and $90,000 an ounce, and we're at 3,500. So that's how much fiat money we've created. And so, what I think the government would need to do is it would need to say, look, I mean, in my view, what they should do is they should come out and say, look, Keynesianism is broken. Debt's a bad thing. We are going to now create a new dollar. 10 old dollars is worth one new dollar, and one new dollar is exchangeable into gold at X rate. And the government stands ready to buy or sell gold at that rate. And we are now back on the gold standard. And fully convertible, both
fully
ways.
convertible?
Fully convertible. Yep. Back, well, at the price. Now, it doesn't have to back all the money supply, but the price would then equilibrate to a point at which people trusted the money, right? If they set it too high, everybody would be turning their gold in to get dollars. And if they set it too low, everybody would be buying gold, shoving the price up. And so, the market price of gold would be the new value of the dollar if the dollar is tied to gold. And in turn, the same thing could be said of Bitcoin. I mean, you could just look at Bitcoin as digital gold. It's really the same set of equations. So the problem is nobody knows what the correct price is. And the further problem is that this is an enormous one-time shock and would be highly inflationary. I know that Luke's belief is that what we should do is just run high inflation for a bunch of years until we get debt to GDP under control. And that's an alternative strategy. And that's probably more likely to be what will happen. But, it's, the way to get there is to do a reset. I mean, the hard reset is, we go Stephanie Kelton, we just print all the money and the dollar literally becomes worthless like it was in Venezuela or Weimar. And at that
Well,
point in time, people are exchanging silver coins and Satoshis to buy and sell goods and services. And the new currency becomes, either silver, gold, or a Satoshi. Yeah, it's a weakness of Bitcoin. There's no doubt about it. I mean, it's a very volatile asset. It's had multiple drawdowns of over 50%, and they could occur some point in the future. But I think that's very typical of any new sound money in the process of adoption. I like to say we're trying to put the ocean into a swimming pool, and we got to grow the size of the swimming pool. And so very much the way that Amazon bounced around, had multiple 50% drawdowns, but went on to become the leading online seller of goods and services. Bitcoin, I think, is going to become a leading, if not the leading currency. But in dollar terms, it fluctuates quite a bit. Now, I'd flip that on its head and say Bitcoin's quite stable. One coin's one coin. These dollars, boy, who knows what the hell they're worth. Sometimes they're worth a lot of Bitcoin. Sometimes they're not worth much at all. So, you can kind of turn it on its head. But there's no doubt that Bitcoin is a less stable store of value than gold. And if one is just looking for stability, as many of my older clients are, they're pretty much heavily invested in gold. But what I would suggest to them is that, having zero Bitcoin is crazy, because the optionality and the asymmetry in Bitcoin is so substantial that even a 1%, 5%, or 10% allocation, over a 10 or a 20-year time frame. I mean, if I'm correct, I believe Bitcoin will 10x in the next 5 or 6 years. And I think in the following 5 or 6 years after that, it will 10x again. So if that's the case, and you had a 1% allocation to Bitcoin today, it would become, all other things being equal, 10% in 5 years, and then it would become 100% in 10 years. And that's, most people can afford to lose 1% of their portfolio. They lose a lot more than that doing other stupid things. So, and the book says, and I strongly believe, Michelle, that for the average person, I mean, I was writing the book actually for the average American. Most of them have all of their 401k in the stock market, which, by the way, right now is not cheap. I mean, your conversation with Chris Irons at Quote the Raven really explored that in great detail. And I love that conversation. And it's kind of like, guys, we're in a monetary crisis. I mean, we got gold going up like crazy. We got Bitcoin going up like crazy. And, you need to think about having some of these sound money assets. If you don't have 20, 40% of these sound money assets, you're going to be really sorry that you don't. And let me just describe a problem I'm seeing a lot with people I talked about now, because I'm starting to get phone calls like, hey, you were right. Gosh, Bitcoin's done well. Gosh, gold's doing well. Gosh, I want to get in, but it feels like it's too late. I missed it. You bought gold at 300, you bought it at 1,000, you bought it at 2,000, you bought Bitcoin at 5,000, whatever. You bought it a lot cheaper, it's too expensive. And I flip that on its head and I say, look, guys, let's just use a metaphor here. Let's say fiat currency is the Titanic, okay? And it may not be. It may not be going down, but it's got some of the same characteristics. And, okay. And let's say gold and Bitcoin are the lifeboats outside of the Titanic, right? They can't print it. And so, yeah, I bought a seat on the Titanic at $300 when I bought my first Bitcoin, and I bought a seat on the Titanic at $300 or a seat on the lifeboat when I bought my first gold at $300. And I've been buying them all along. I paid much higher prices over the years. Okay, so now the seat to you is, $3,500 for an ounce of gold, and $112,000, or today it's $108,000 for a full Bitcoin. You don't need to buy a full one. You could buy 10,000 or 5, you buy whatever fraction you want. So that's a higher price, but do you want the seat on the lifeboat or don't you? Would you prefer to stay on the Titanic? And so, again, it's a metaphor, and I'm not 100% sure that fiat currency is going to completely fail, but it sure seems to be sinking. So, to me, that's again why I wrote the book. I just want people to be aware that we are in a situation where sound money is really becoming quite important. And actually, I don't think we're that late. I mean, if you go out and you look at all the financial assets, the $900 trillion of financial assets out in the world, gold is 20. So what's 20 over 900? That's a small percent. And Bitcoin is 2 trillion out of 900. It's like 0.2% of all the assets. So, I mean, we got some room to grow here,
Only 30 to 40% of money had to be backed by gold during the gold standard. Some believe a reset is feasible since the dollar's relationship to gold has deteriorated so much. A new dollar might be fixedly linked to gold in order to restore confidence. Finding the ideal rate is challenging, though. People will hurry to exchange dollars for gold if it is too high or too cheap, which will undermine market stability. Bitcoin, commonly referred to as digital gold, is a digital currency that operates on the same principle of scarcity as physical currency. It will take decades for it to materialize as a reserve currency. But history demonstrates that one form of sound money usually prevails, due to its rapid growth. Bitcoin may surpass gold in value by 2030 or 2031. Physical versus digital sound money is more important than gold versus Bitcoin. Both significant at the moment. However, Bitcoin might have the advantage because to its fixed amount,
We have an administration that understands that the problem exists and that understands that these are the two solutions. And so how they march forward and how they implement it, we can't predict. We don't know. But we do know this. We do know he's been willing to do bold and risky things. And he's not afraid to take chances. And he might be, aware that if he has a very inflationary period coming up, that the odds of Vance winning are slim. And one thing that's also interesting and true is that the president actually has the power to do these kinds of monetary things. I mean, if you think about the Constitution, it really said that, Congress could, was controlling money, so to speak. I mean, only gold and silver could be money. That's in the Constitution. But since that time, the executive branch has really kind of grabbed the mantle on it. So, basically, Lincoln started when he printed greenbacks, and then, Roosevelt did it when he grabbed the gold and revalued the gold. I mean, the reset we're talking about, by the way, really kind of echoes what Roosevelt did. I mean, we're in the middle of a depression. We were experiencing massive deflation. Gold was overvalued, and so he devalued the gold. He grabbed all the gold and he devalued it. And so, and then Nixon too, when he came along in '71, he just took us off the gold standard. So this we've got precedent for the executive branch taking bold action. And I hope and pray that they actually will take bold action before we spin off into, the kind of hyperinflationary shit I was talking about before, because that would obviously be, a dreadful way to go through this transition. But, it's clear that I don't think they have it all figured out. I mean, I think Andy is really on target when he says a good way to start would be gold-backed treasury bonds, see how that goes. And, thankfully they've got another 3 years to play with it. But I'll say this, I mean, boy, doesn't it imply that, I mean, what's going to happen with these assets is just going to be something else, right? I mean,
Yeah.
this is actually, that's Bitcoin in bond terms. Well, we'll do this one first. Notice this in 2020, kind of when, COVID started, since that time, if you would own Bitcoin versus US bonds, you're up 2,000% versus bond terms. Okay. So that's interesting. Then related to that, let's see, find the gold and Bitcoin terms. Having a little bit of a trouble with my screen sharing here. Oh, yeah, here we go. The sovereign. Are you looking at this now? Do you see it? The sovereign debt crisis has started.
We do see that, yes.
Yeah, perfect. So this is gold and Bitcoin, or I mean, this is gold and debt terms. So look at, I mean, this what this tells you is that gold is killing bonds, and bonds are in the process of dying, which is really the same as currency death. But okay, let's shift over into Michelle's question about how much Bitcoin the U.S. controls and who controls it, and why are we at an advantage or disadvantage. I mean, first of all, I believe that about 40% of the Bitcoin in the world is in the United States when you consider private individuals as well, and corporations and ETFs. I mean, there've been some studies that have shown that. So, and I think China has 100,000 Bitcoin. I think we have roughly 200,000, although there's some debate about that. The customs service or the sheriff's service, whoever holds the Bitcoin said they held a lot less than all the 200, but we're hoping the 200 is still there. Let's assume it is. I don't think Satoshi Nakamoto is the government. I think this was cleanly developed by a bunch of cyberpunks who wanted a sound form of money. I think I actually know one of them. He's still alive, nice guy. And I don't think it was one person. I think it was a group. I think they recognized the disruptiveness of this thing, and so they just decided to kind of keep it quiet. And I don't think the million coins that Satoshi owns will ever move. I also think that we've got 21 million coins. Probably 10%, maybe 20% have been lost, so it's less than that. But the intriguing thing, and I'm not gonna say I know the answer to your question, Michelle, but the intriguing thing, and it's been posited by some, and it may not be terribly far-fetched. Is strategy a front, MicroStrategy, Michael Saylor, is that a front for the United States government? And, I can't disclaim that I know one way or the other, but there are certain parts of the pattern that mean it's a possibility. I mean, he pivoted hard into Bitcoin right around 2020 when Lowry was developing his thesis. We know, and I know because my partner David Foley met with Lowry and heard him say that the people in Washington, D.C. fully understand how important Bitcoin is strategically to the health and economic security of this country. And then suddenly you have a guy who, he lives in D.C., has done a lot of work for government agencies, grew up on Wright-Patt Air Force Base. His dad was an Air Force officer. He went to MIT on an Air Force scholarship. He was ROTC. He got out. The DuPont family backed his first business only a handful of years outside of MIT. I mean, and these big families, as we know, are connected to the CIA. I don't know. I mean,
According to Lawrence Lepard, gold and Bitcoin are both excellent ways to hold on to value, although they typically lose value over time. Since there are only 21 million coins in circulation, Bitcoin has already eclipsed gold. In contrast, the supply of gold and other commodities can increase in tandem with price increases. This fixed limit gives Bitcoin a distinct advantage in addition to its practical advantages of being simple to communicate, store, and validate. Lepard claimed that most people didn't trust him when he had predicted that Bitcoin could reach $1 million. However, given that adoption is accelerating and states are struggling with inflation, he believes that objective might be accomplished in 5 years. He added that although many gold supporters are still unsure, China and Russia may already be covertly purchasing Bitcoin. The current price of gold is at $3,500, but it might potentially rise to $4,500 or $5,000 as inflation and investment interest increase. Silver prices will climb as well. Lepard claims that due of its special features, Bitcoin is a better option to take the lead as the primary form of sound money in the future. Even though precious metals are still significant,